All right, welcome back. Next, we have Citizens Inc. It trades on the New York Stock Exchange under the symbol CIA. It's a diversified financial services company providing life, living benefits, and final expense insurance and other financial products to individuals and small businesses in the U.S., Latin America, and Asia. Happy to welcome President and CEO John Stenberg and CFO Jeff Conklin. Welcome, gentlemen.
Thank you.
Thank you.
All right, the floor is yours. Take it away.
All right, let's maybe go to slide 5. We're going to try to keep this conversational. You will use the slides as kind of a guide, but we want to make sure we leave room for Q&A at the end also. So if you have some questions, we'd love to answer them at the end. So a Citizens overview. So we're a life insurance company, and we're a little bit unique. We do about 2/3 of our sales, our premium revenue is overseas. From overseas originated, and about 1/3 here right now. And if you see the map here of the global, we've got a black dot in Austin, Texas. That's where we are talking to you today. A cool 106 yesterday as I go outside. It's not fun. We've got an operation in Puerto Rico, and we get most of our premiums internationally from South America and Taiwan. So you'll see dots there and there. We've got over 200 employees. We have policyholders in 80 countries, and we now have over 4,000 independent agents. About 1.7 billion in assets. We crossed over 5 billion in gross insurance coverage, and we have about 167 million in premium revenue. If you look at the geographic slide there, you'll see our largest countries are United States, of course, and then Colombia, Taiwan, Venezuela, Ecuador, and Argentina, with other countries contributing, close to 30%. So we're pretty diversified as far as a small life insurance company goes. We've got kind of 3 primary markets. On the right here, I'll start with the right. We have a home service business based in Louisiana, and that's kind of final expense business, but it's kind of neighborhood embedded agents. So these agents have a route. They know the people. They know the families, and it's a very unique and very close level of coverage for those folks. Those are now independent agents, but we have a management force there to train them, onboard them, recruit them, and make sure that they're serving their customers. Then for the life insurance segment, it's broken into the international market, which I mentioned before. I mentioned the countries in which are really strong. And the key there is we're operating in markets that have often a unfortunate history of either inflationary disruption or political disruption for your upper middle class families and maybe lower upper class folks that need some currency diversification and protection for their family. So our offering there is a very straightforward whole life product. It's a simple no bones or endowment product. These are simple no bones products, but they're dollar denominated. And so I often joke kind of our marketing strategy in these countries is the US dollar. So if you were for example, had a car dealership in Argentina, and you're successful, you may want to provide coverage for your family in dollar-denominated life insurance. It would be a great way to diversify and provide some really solid protection. So we've been in that market for decades. We're having a great year this year in that market. We'll talk about that more. Now, domestically, which is our fastest growing market, we have a final expense business there. We're in over 40 states. We're looking to add 4 or 5 more states in the next couple of years. And so we'll be pretty much having national coverage in our final expense. This is a business we entered about 1.5 years ago, and it's really taken off this year. So when we get to the numbers, you'll see some really fast growth there. So our key there is to make sure we grow in the right way, the smart way, and the profitable way. All right, I'm not going to go through all of this, but I mentioned the dollar denominated is real key to our international growth. All that experience in South America, though, has given us tremendous expertise in the Latin markets. If you walk our halls here in Austin, you're not just going to hear kind of one version of Spanish. You're going to hear different accents. You're going to hear a Colombian accent and an Argentinian accent. You're going to hear Mexican. And so we know the difference between these different countries. And so often if our clients need service, we can often marry them up with somebody from their home country who's working here for us in Austin. The cool thing is that we have not yet fully leveraged this expertise domestically here in the United States, where the Latin market or native Spanish-speaking market is the fastest growing demographic in the United States. And so that's an untapped growth potential we have that we certainly plan on taking advantage of in the coming years. I think most of our sales are from products that we've launched in the last year or two. We've done more product development in the last 2 years than we did in the prior 20. So we're trying to bring an element of innovation to our company and our market and our agents. And we're looking to really use technology to leverage and shake up some of these old stodgy markets that we're entering in that we really like, and we can be a disruptor there. So I think we're good on this page. We've had some pretty lofty goals that we set for ourselves. In a life insurance company that's been around for nearly 55 years, growing fast is not easy to do. So a growth target of 25% is pretty ambitious, but we've already hit that milestone in terms of first year revenue. And increasing your number of agents is another key one, and we've already hit that. We've introduced a product so far. We plan on making sure that we hit all three of these milestones. We have some product launches lined up before the end of the year. I think I've covered most of this. This is more of a reading slide. And so why don't we jump into
some accomplishments.
Yeah, let's go into some accomplishments. You want to grab this one?
Yep. So I know some of you have maybe listened in over the last year and a half. We've been on these phone calls. And I think every quarter we add to our accomplishments. So let's just hit a few, do a little bit of repeat from what John said, but we have a record number of global producing agents in the second quarter of 2024. And we continue to increase the agent count, which theoretically increases our premium and our growth. Our first year sales have increased 7 consecutive quarters, quarter over quarters, which is phenomenal for us. And even better, we increased from fourth quarter of last year to first quarter. And typically a fourth quarter tends to be a lot higher than any other quarter in an insurance business. We had a record amount of insurance issued. And by the way, that's 3 consecutive quarters. We've had records. Fourth quarter was a record, first quarter, and now second quarter is a record sales. And then as a leader, we're a leader in the U.S. denominated sales in South America and Taiwan. And something I want to add, John said something to the fact that we're in 41 unpenetrated states. If you look at us about a year ago, we were in 30 states, and we only had about 5 of those states with licensed product. Now we're in 40 states with licensed product in the majority of those states. And so I guess another way of saying that we can grow domestically, unlike many other insurance companies in this space. We've had over 20 consecutive years of positive operating cash flow. We leverage very large reinsurers to help with risk mitigation on insurance. We have no debt, but we do have an access to a line of credit of $20 million at our holding company if we needed to support this growth that we're seeing. Recently, there was a press release from AM Best. They reaffirmed our B++ rating, which if you remember from last year, we got our initial rating for the first time ever for this organization. This is a very impressive slide. Our new products, our successful campaigns, and our growing distribution relationships have shown a 73% year-over-year increase in issued face amount. This is a leading indicator for growth and future profits. You can see it was 329 last year, first half, versus over 570 million. A focus of management is continue to grow our book value per share. You can see starting in 21, we've shown this growth with second quarter 2024, 8% over year end. The right side is our equity. Our shareholder equity is also continues to grow year over year and 9% from year end. I'm going to hit a couple financial slides, and then we can open it up for some Q&A. We have a low-risk business model through kind of our traditional products, and we have a very conservative investment approach, driven somewhat by regulatory requirements by state insurance departments. We leverage, as I said a bit earlier, to mitigate risk of exposure of high claims. We use Swiss Re, Munich Re, RGA, who are global large reinsurers. John had mentioned 1.7 billion of assets. The majority of those assets are actually our bonds or invested assets as we set aside money to pay claims, future claims for our policyholders. We have a high quality, well-diversified portfolio. It's across asset class, sector, insurer, borrower. It has an average credit rating in A and above, as well as 99% of the fixed maturities are investment grade related securities. Our capital adequacy is within our limits, within our levels, well within our levels in both our risk-based capital, which is our domestic insurance operations, and then our international operations, which are out of Puerto Rico, both well within the targets that we set and by the regulator set as well. Our parent company, which is Citizens, our holding company. Let me remind you of our stock symbol, CIA, pretty easy to remember. That parent company holds about $26 million of cash in invested assets, are pretty easy to liquidate to provide support to the insurance operations for growth. My last slide, just hit a couple things on second quarter results. Our revenues increased 6% to $62 million. In the second quarter, driven by primarily first-year sales, new business sales, as well as increase in net investment income. Our book value per share grew 30%. That's kind of true shareholders' equity. If you back out other comprehensive income, which is really mark to market on our bonds, it grew 8%. And last is our operating income for the quarter grew $700,000 from last year second quarter to this year second quarter, $7.1 million. So that's kind of it for our presentation, and we can turn it back over for some Q&A.
All right. Thank you, gentlemen. We do have some questions for you. We want to start with Brady Strickland. Your $1.7 billion in assets. He sees there's mostly bonds and reserved to pay claims. At what percentage have these assets grown? And are they on pace to continue the same growth?
So yes, our assets are growing about 3 to 5%. And if you get, the problem is you got to factor in mark to market impacts. So it actually can go up and down and fluctuate depending on how interest rates impact our bonds. So an increase in interest rate environment, our book value will decline, but we are a long-term investor that will hold these securities to maturity as we need to match our assets and liabilities. So we will continue to use new money to grow those assets but right now we're investing a lot in our business because growth requires investing with first-year sales. So it'll be tempered a bit the next probably year, but then we'll start moving up as we start collecting those renewal year premiums.
And Ross Mitchell has been in the stock since April. Ross is very happy. What do you attribute the gains to, and how do you feel about the current valuation?
I think we'll probably take a vote. You're asking, how do we feel? Obviously, we feel really good that we've had a real strong last couple weeks in the stock price. And that happened as soon as we came out of blackout and we released those earnings. And people are, and we're doing more calls like this. So we're reaching out to investors and it's helping investors discover that we have a large discount to book value, and it's unusually large for a company that is not in distress and a company that's growing. So it's hard to find life insurance stocks that are growing at our pace in terms of first year sales, and so we think it's still a value, and so that's how we feel about it. But we're happy for the recent rise.
And what do you attribute the gains to?
Well, I think it's getting our kind of our name exposed to the investor community. Reach outs like this, because I think we're kind of a hidden company nobody knew about, and if you can see some of the insider buy-ins. We all believe in the organization for growth. We've all put our own personal funds into this organization. And we're just going to continue to keep our book value per share growing, which will lead to earnings growth over the next few years. I really believe these calls work personally, because we get feedback from these. We actually have investor call one-on-ones after these calls where we can tell our story in more detail.
And Luca McLean asks, is your home services segment an insurance product? And how does it compare in premiums to life insurance?
It is life insurance. It's a simplified issue life insurance at low face amounts that manages our underwriting and mortality risk. And it's really designed for people who need that final expense coverage, who may be older and may not be as healthy as they were in their 40s, when you can buy fairly cheap life insurance. So it's a product that is needed, and it is traditional whole life insurance.
I would add two things. Number one is that's about $45 million of annual sales for us in the home service business, as well as the target market there is really lower income policyholders in primarily Louisiana, Arkansas, and Mississippi.
And Maria has a question asking you to clarify, are you in the term and whole life business, which you are, and how would one get a quote, and do you quote by region?
We're not in term, we are in whole life. And if you were in, it depends. We have domestically, if you're in the United States, you would most likely get a quote through an independent agent who sells our product. But since we white label, that adds a little bit of a complexity, asking specifically for our product, because it may not be called our product. It may be called the label under which it's the product under which it's white labeled with our distribution partner. So it's fairly easy to get a quote from us if you find an independent agent that is appointed with us.
A few questions about your agents. Ed Cohen asks, what's the training like for the agents? Since you're so geographically spread out and vast, how do you ensure they're up to date on all of your products?
Another good question. I love these questions. So the answer to that, it depends on which agent you are. If you are an agent overseas, we have our phenomenal partners that we've been partnered with for decades, and they have a whole training regime. So you're onboarded. They'll train you the way they want you to. They like to train you in how to approach the client and how to make sure the client understands the product and how to fulfill the sale and all this good stuff. Domestically, if you're in security plan, we're actually doing a major overhaul of our onboarding and training right now as we speak, and to improve the onboarding, training, and systematize it, and move it away from what your sales leaders think to something that's really best in class and uniform across all those agents. And then in our domestic final expense market, you'd be recruited as an agent into one of our partners, and they have their own training process. And some of them are really impressive. I've got, for example, in my office, a kit that you'll get if you're a new agent. It has everything in there, what you'll need to talk to the client, your process, and then you're trained for an entire week before you're even allowed to sell, to make sure that you have all the compliance down and all the knowledge you need to make sure you give great information and great service to that client. Good question.
I would just add to international, we we tend to bring in, 30 to 100, depends on, with and without COVID years, people into Austin, Texas for training here in home office. In fact, we have training going on, I think a couple trainings in the next 4 weeks.
Yeah, we got a whole group from Argentina coming in on Tuesday, about 30 folks. And so we'll be hitting training hard all week next week with those folks.
And Brian asks, are your agents exclusive? Do they work for outside broker dealers, or do they also sell your products on the insurance side?
Generally not. We don't do a lot of business with broker dealers. Some of our agents may have that aspect to their business, but we deal exclusively with independent agents. We no longer have our own employee agents or owned agents, as they might be called in some markets. They're all independent. I would say within our security plan operation, almost all their business is going to us, is going to security plan. They may be licensed appointment for example, a P&C side, so they can service a client there. Some of them do that, some of them don't. They may be appointed with another carrier as a backup in case our product doesn't work, but most of their business in that market comes to us. Domestically, in a final expense, they'll have 2 or 3 favorite carriers. And so our goal there is to be one of their favorite carriers. And so we put a lot of effort into being easy to work with and predictable and understanding the sales cycle and understanding what they need rather than forcing them to take our process the way we want it. We try really hard to be agent friendly and process friendly.
Well, the number of producing agents is going up, so the amount of insurance issued is going up. Why wouldn't premium revenue also be going up so rapidly?
So a couple things. I thought of a new analogy. I'm going to try it on you today. It's a new sale in life insurance is kind of like getting a new client on a paper route. So you might work really hard to get Mrs. Jones to get that paper, but then she's on your paper route. So you have to work like the dickens to get a life insurance sale often. But when the client buys that product, it's a commitment on their half for it's a lifelong commitment. They'll have that policy for the rest of their life, ideally, and they'll pay premiums for the rest of their life. So oftentimes your expenses on a life sale are higher than the first year premium, but then you have that years and years and years of premium coming. So great first year sales are a great leading indicator of future revenue, but they don't result in an immediate bump percentage-wise that corresponds to your sale increase because you have all your renewal premiums from all the prior years of sale. But if you're growing sales, that future revenue is likely to go up.
I would just say two facts there. Number one is first year sales or first year premium revenues are actually up 64% versus last year. So, it is a slightly less than the in-force. But as John said, about 82 to 85% of our total premium revenues are renewal year premiums. And so when you have that high of a percentage, you're not going to see that growth align. But first year premiums to issued is actually within a reason as far as the growth.
Well, also in the most recent quarter, Citizens increased the amount of insurance issued by 86% year over year. So what is driving such growth and such increase?
Well, one, it's easier to have really high percentage increases when you weren't really in the business in the years past. So some of it is that, but we're getting really strong sales. $3-4 million a month is the pace you've been at in the last few months. And that is significantly higher. What's driving that is a couple things. We listen to our agents and our agency partners as to their frustrations, and we try to design the product and the process right from the beginning to address those frustrations. Again, the goal here for the domestic market is to be one of their favorite players. You don't need to be their only player. You need to be one of their favorite carriers. So they reach for you on the shelf and pull you off the shelf when they're with their client more often, or they put you on the sheet with 2 or 3 carriers and let their client decide. And we're on that page with our agents. So because we've earned our place, our way there by listening to those agents. The other thing is our white label process. It's been very, very, very successful. So we're getting agent demand from the agencies because if they want to, they can work with us to put their name on the product, and that's actually pretty rare.
And domestically, who is the target market, and what really differentiates the life insurance and final expense products leading to new sales?
Final expense is life insurance. So there's not a difference between life insurance and final expense per se. It's a segment of the market, though. It's a segment of the market for those who may have relied on employer life insurance for their entire career, and now they're perhaps 67 and they realize they have no life insurance coverage. It may not be the first thing they think about when they retire, and they lose that employer life insurance. So it's generally for later stage and middle to lower income clients who didn't buy, a policy in their 40s or 30s that they're paying on premiums because they were relying on that employer insurance. So so there's not it's a segment of life insurance, but it's still life insurance.
And out there in the market, who are your competitors and what's your competitive advantage?
Well, that's one of the reasons we really like this market, the final expense market. I'll limit it. I'll answer the question there first because we have obviously competitors in our security plan and international too. But domestic final expense, it's a market that has been traditionally dominated by small players. If you want to juxtapose that versus, let's say, high face amount term or high face amount universal life, is dominated by large players, Prudential, John Hancock, New York Life, Lincoln, and the competition there is brutal. And those returns have been driven down to close to their cost of capital. It's been largely commoditized. Well, final expense is a market dominated by smaller players, and they look for little niches to have, or regional niches, or they like this kind of business. And so it's much easier to come in and find a place there and get actual healthy returns as the carrier, and find a place where your competition is reasonable and it hasn't been driven down to commodity levels of return. Internationally, we don't have a lot of competition. The competition, oftentimes when our product is presented, it's the first time anything like this has been presented to the client. So our competition there is kind of lack of awareness is really the competitor. And we need more agents and more people telling our stories in these markets. And from that, you gain success. It's not necessarily another competitor in your way. It's awareness and enough people telling your story.
Thank you for that. Don asks, besides guidance, have you set any milestones for the company as a whole for 2025?
Well, we have, but we haven't stated those yet. So we're right in the middle of planning right now for 2025. And knowing us, we'll set some pretty aggressive goals for our leadership and compensation, and we'll expect to meet those goals.
And Natalie asks, now, how many customers do you have? And besides these insurance products, are there any other revenue verticals you can tap them with?
What's our total client base?
So probably our number of clients and policyholders is probably higher than 300,000 because we've been in business for 50 years. I would say that it's about 65 to 70,000 internationally, and the rest are predominantly in Louisiana. And then, of course, we're adding policyholders pretty much every day at a pretty high pace. I think we've got 25,000 at least new policyholders with our new domestic market this first half of the year.
That's a lot.
There's revenue growth in a couple different ways. First of all, if you look at our final expense market, we're just getting approved in a number of states. So we have geographic expansion right in front of us. So that's obvious, and we're going to be working like crazy to make sure we take advantage of that geographic. We also have new markets to enter into in terms of end-to-end Spanish here domestically in the United States. And that's something that we've begun working on. So we have some really great opportunities with our current products domestically to grow. We also internationally, there are markets that we haven't fully tapped yet. We've got great partners in Taiwan, Argentina, Colombia. They have reach into other countries in that region, but there are key cities and key countries that we are not properly represented in. And so we're looking to grow and expand our international brokers, which is a new effort on our part to get coverage in those countries. So I would say first and foremost, it's our interest to take our current products and grow geographically and market-wise and take advantage of those opportunities. Now in the future, we have a lot of interest in exploring and analyzing hospital indemnity plans, annuities. There's a number of markets that are tangential to our core products that our current agents would be interested in, and we'll be looking at those opportunities also. So we have a lot of opportunities to grow into new markets with current products and new products to co-sell, cross-sell in those markets.
Well, wonderful presentation, gentlemen. Do you have any closing remarks for our viewers today?
No, we want to thank everyone for joining this and participating. And, we really love telling our story, and we just want to thank you for spending some time listening to the story and hope you get excited as we are about Citizens.
Wonderful. Well, great job. We'll see you again soon.
Yep. Thank you.
All right, everyone. We'll be right back with Interstellar.